Are you trying to figure out what the best option is for flood insurance for you? Are you just trying to solve that problem of, hey, my bank's requiring it. I got to get this taken care of so that I can get closed on this house? Well, then this video is for you here today, because today we're actually going through and showing you how to use the direct-to-consumer tool that the National Flood Insurance Program has put out for a few minutes. It tells us, look, 10 minutes or less to get a quote. That's awesome. You can get back to living life. What all do you need? So we're going to actually go through and show you, first of all, how long does it take to get in this video? Actually go through it. Is it giving you the right coverage? What you need to be on the lookout for. So let's go into start figuring out this tool. Oh, before I forget though, don't forget to subscribe to the channel below. So let's go ahead and hit agree here and move on over here. So let me go ahead and put in my address. Now it's asking me, hey, is this a primary address or secondary? Why is this question important? Look, this question is really important, not as much maybe on private flood insurance as it is with the National Flood Insurance Program. Because remember, if it's not a primary address, then you do get charged that Homeowners Insurance Affordability Act surcharge of an additional $225. So make sure that, hey, if you're living at this address, typically more than 50% of the year, it's marked there. If not, you are going to get hit with that extra fee. So let's go ahead and hit this here. All right, now here's the other thing we need to figure out. Hey, what kind of building are we dealing with here? Look, this has a big difference to do with rates. Especially things like manufactured homes, if it's a single family home. And by single family, I mean one actual family that lives there. You could have a 2 to 4 family unit building here. These are different units that families can live in. But if you live in a traditional house like this one is right here, like the majority of people are going to be, I'm going to go with a single family home. Maybe you live in some kind of co-op or 2 to 4 family unit building here. It's going to be treated as residential. You want to click that. If you're in a residential manufactured mobile home, you want to click here. And remember, one key way to know, like if a manufactured home is you think, hey, this is actually a real home now. It's no longer a manufactured home. Typically, if it still has a serial number, it's going to be considered a manufactured or mobile home. I know in today's world, you have to look very closely at these things. Sometimes we'll think things that are actual single family home, but they're manufactured. And that could have a big impact come claims time, where you may have to pay difference in premiums. Your claim could potentially get delayed because you don't have the right foundation type. The next one is a residential unit and something like a condo. That's important to understand there. So we're talking about the specific unit here, not the entire condo. So as you can see, as you go through these 4, you can kind of understand that, hey, working with an insurance agent on your flood insurance might be a better option for you, because if you pick one of these the wrong way, it can end up costing you thousands of dollars. It could end up costing you lots of time. Maybe your bank doesn't accept the policy and ends up costing you even more time. So while this is a great tool, I think it's awesome that the National Flood Insurance Program is finally offering this directly to consumers. There are still some areas where people need to work directly with a flood insurance agent near them. But let's go ahead and click single family home here. Now the foundation type, and this can get even more tricky. Typically, we're talking about 6 different foundation type here, just like on the new elevation certificates. We're talking about a home that's on a traditional slab, a basement. So what is a basement? Well, FEMA defines a basement where all 4 sides are below ground. Now you may think, oh, yeah, but it's only about a foot or so. Look, this could just be really just a couple of inches where all 4 sides are below ground. They're still going to consider it to be a basement. In fact, we saw where coverage was denied on a flood policy in Florida because it had what's called a sunken room. And this means when you step down, that it stepped down about 2 inches. And because of that, it was written as a slab and not one with a basement. And the policy was actually denied. So you really want to make sure that when you're going through this, you truly understand what each one of these is. The difference between a basement and a crawl space. And it's got the definition here to kind of help you a little bit. Elevated without enclosure. Elevated with enclosure. These two too, if you mark the one wrong here, potentially could end up costing you lots of money. Or elevated with enclosure. And you can see what each one of these kind of gives you a good definition here. And if you even want to help find this, you could go through the differences here, and it could really help you understand that. But this is a slab 1 grade that we're talking about here. So let's go ahead and look at it here. Now we've got the construction type, or frame or masonry. Remember, frame we're talking about wood, masonry we're talking about brick, or if it's other or mixed. Mine's a masonry. So here's where it could kind of get challenging too. If you don't have this information, I mean, I don't remember this building was built. I mean, I think it was built in the 80s. I really don't know the date that it was built. Square footage. Are they talking about living or unliving? When they ask you this, you're talking about actual living space that's square footage. They're not necessarily talking about maybe a detached garage or attached garage even. It's got square footage in there unless it's living space. We're talking about living space here. This particular house had about 2,200 square feet, and it was 2 stories. Now, here's the catch here. This is how this changed with risk rating 2.0 is that the mitigation discount changed with how machinery and equipment discount is. It has to be located above the first floor now. So if you only have 1 floor, it typically has to be in the attic. If you have 2 floors, it typically still has to be, above that second floor. And so this is, typically most people do not qualify for this discount unless it's new construction probably. All right. So now look, this is awesome on building coverage, but you're probably thinking, well, my bank's only requiring $250,000. That's what I need, right? I only need $100,000 in contents. So I should be good here. So let's just kind of leave the coverage the way it is. Now, one of the great things is here, it is giving you some guidance on how much flood insurance you might need to replace your stuff. Now, what you're looking for here too, look, and this can be a big rate driver, we'll see in a minute, is what's called a replacement cost estimator. And if you're working with a local insurance agent or flood insurance agent, you can use that replacement cost estimator. You can even find one over on the Flood Insurance Guru website, where we help people determine this every day, as it's such a big driver now in rates. Now, what I also like here is they're telling them, hey, what's not covered by flood insurance. And you're talking about temporary living expenses and housing. Remember, this is actually something that a private flood insurance policy could cover if you've got it listed on there. Now, if you're renting the property, you're going to want just really contents coverage on your policy. But we got the building coverage and we've got the contents coverage now. Let's go ahead over to continue. And look, while in the waiting period, you're trying to figure out, but I don't need a waiting period. I'm getting closed on this house. Remember, in order for it to qualify for no waiting period, it's got to be for a loan closing that's taking place. If it's not, you're going to have that standard 30-day wait period unless you had a 1-day wait period where a flood zone recently changed. And here's the thing. This was actually an old address that I used to work with, and we actually changed the flood zone on it about 15 years ago now. But let's go ahead and put loan transaction, no wait period. Now, we've put all the information in here, and we've got everything in here. So let's go ahead and hit next and see what happens from a rate standpoint. Oh, look at these rates. Pretty reasonable rates for that amount of coverage. Now let's go back. We see this rate 728, 722, different deductibles. As you can see here, look at these deductibles. Remember, you have a deductible for building and contents. And you see you're saving $6 a year by increasing your deductible $800. You're saving $20 a year by increasing it $3,000. But remember, you're really increasing it $6,000 because you've got a different deductible here. So that's something you want to pay attention to on the deductible here. Now let's see if it'll let us go back. Oh yeah, previous. Now I want to kind of show you what would happen if we took contents coverage off, which we typically don't recommend, but it can be a big rate driver. So let's just go and put this as a 0 and see what happens. I bet you it's going to lower the rate about 25 to 30%. Well, look at that. Say lower our rate a couple $100. So it did lower the rate roughly about 20%, 30%. And so these are things that you want to take a look at. Maybe you don't want contents coverage, but let's talk about why you would want contents coverage and why it's one of the biggest exposures for people is that a lot of people think, oh, I only need to cover my building. I don't need personal belongings coverage. But look, getting those belongings back is very expensive. They think, hey, my home insurance is going to cover the contents, so I don't have to worry about it. Remember, this is flood, which is a different peril. That means that typically most home insurance policies are not going to cover damage to your home when it's a result of flood. So you want building coverage and you want contents coverage here. Now let's go back and just say, all right, then let's increase it to $50,000. And see what happens. And I get asked this question all the time. How much contents coverage do you think I need? Typically, whenever you're insuring, whatever you're insuring your building for, I typically recommend about 50% of whatever you're covering the building for. Now, in a policy like this, where they offer you up to $250,000, wait a minute, I don't get up to $125,000 in contents coverage here. But you can see for just $50,000 more in coverage, that rate was what, $722? So you're talking about saving $40 a year for $50,000 in coverage. Take off, a $2,000 deductible, and you're talking about $48,000 in coverage for about $20 a year, or actually $40 a year. That's a pretty good deal there. So let's go back and adjust this. Now we got everything on here. We've got these different options. Typically we get asked, hey, what deductible should I go with? Typically what we recommend is about that $2,000 deductible, because you want to make sure you do have enough in the bank, but you got to remember, you're not just going to use this anytime, because if you do have a flood, you've got to be careful, because a flood does stay on the property forever. This means that if you've had a flood, you may not be able to go to another private insurance option. And so when considering should I file a flood or not, you want to look at the long-term and the short-term impacts here. So let's just select this option here and see what happens. Oh, great. The next steps to purchasing is you want to move forward with a quote. They're probably going to connect you with a local insurance agent, which typically that's what they'll do in most of these situations. So let's go ahead and share a quote and see what happens. So we could have a few different insurance agencies that's recommend to us here. Now, it's doing it based on zip code. And so that's what you want to look. You want to take this to your insurance agent and you want to share it with them and say, okay, I've gotten this National Flood Insurance Program quote. Can you now provide me with 3 different private flood insurance quotes to compare it to? Can you tell me what the replacement cost is on my building? How much coverage do I actually need here so I can compare it to this? The wait periods is what you also want to ask here. You want to ask about policy exclusions and all these different things. So you don't necessarily just want to buy this coverage and move on, because there could be a lot of different gaps here. It could be a lot of things you don't understand as a property owner. There's a lot of things that I didn't understand when I bought flood insurance for the first time more than 15 years ago. When I was in the wrong flood zone, I was given a premium of $3,000 that should have been $300, and my entire loan closing almost fell apart. It's why I've been doing videos like this for the last decade to help homeowners like yourself and potential homeowners. So take that quote, find a local flood insurance agent. You can go over to floodinsuranceguru.com and look at comparing it to 3 different quotes as well. Look at getting that replacement cost estimator to make sure you've got the right replacement cost. I hope this video on going through and getting a quote with the FEMA Direct Consumer Tool has helped you. Remember, make sure to subscribe to the channel below. I'm Chris Green with the Flood Insurance Guru. And remember, everybody's in the flood zone. It's just a matter of how much water it takes to get to you. Thank you.